The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back to the Diagnostic Trading Hour. We got the S&P is up 4 points, 4.5 points right now. We got the Nasdaq up a little over 10 points. We got the Dow up 45. The Russell's up 1.9. Gold is now down 5.5 points on the day. After running up, it has just been slamming down. We had a great gold short setup this morning. And it's just been going ever since. I mean, it was perfect on the dime. Perfect turnaround. And just still trailing it down to see how far it's going to go. Have about 25 minutes left till the gold pit closes. Looking on over and checking out some of the other markets. We got copper right now down over 1% on the day. We got silver is it's down about 0.5% right now. It's not moving near as much as gold is. I guess, I mean, it could be if you look on the intraday charts there, but gold has just been beautiful with that big run up and pull back. Then looking on over, we got corn, and corn is down a couple points right now, not a big move. Soybeans down quite a bit, over 1% move on soybeans, down about 18 points on the day right now, with oil down $1.50, and just a nice solid move on oil overall for the day. We got natural gas down about 3/4 of a point. We got euro down 30 pips. We got pound dollar down 132 on the day, pulling a little bit off those lows. We'll go through, we'll look at the deviations on them a little bit here. We got Aussie dollar down 8 pips, and we got that dollar index is pretty much stronger. It's just about everything. We got the dollar going stronger. The only thing it's a little bit weaker is on the USD Canadian. So just go through and we'll do a quick review and check out everything. First thing, I want to do a sort of a wrap-up, a little bit of a repeat of this morning's show, but just in case you missed it, make sure you got everything. Called out a few trades for last night and for today. All of them have went great. So I hope you took advantage of some of those over on Nadex. And what we said was, hey, early in the morning, if you're checking it out, we got the pound dollar PMI and on that trade, so you could have taken advantage of that. Now, what about that at 4:30 a.m. and then over in the morning we had 8:30. We had the USD Canadian. That trade worked out great. And then at 10 a.m. On the ISM manufacturing, went in. I said, hey, check out the Aussie dollar, and that trade went out great as well. So you could have done strangles or straddles on really any of those. Really, but the best ones I like to do. Straddles. I'll do them in the morning. In the evening, really any time of day. The straddles are done on the spreads. The strangles are done on the binaries. I'm usually doing those in the mornings. I'm not as big as doing those at other times of day. And so you want to make sure you do them at the right time. The reason the binaries I'm not as big at night on is because they're daily. Therefore, they're further away, and the risk-reward isn't as good as like the 2-hour, 4 or 5 hour spreads that are available. And I only plan on being on the trade ideally for a few minutes to maybe an hour or so. I don't really want to be in the trade that much longer than that because I'm trading it on news. And again, I'm not picking direction. I'm not saying the news is going to be good or bad. I don't care. I just want it to move. Okay? And so we're going to focus on pairs that move the most. We're going to focus on news events that have the highest impact. And we do that day after day after day. And works out pretty well. So anyways, check that out. Go back, watch the archives. You can see that. Here and the Bull Bear Binary Hour, where I go through and I've talked about the different news trades to check out all this week, and you'll notice a pattern and how they've worked out really well. For next week, what can you do to take advantage of this going forward? Well, we got Aussie dollar going to come out 7:30, building approvals. So check that one out. Aussie dollar right there could have an impact on copper maybe, but Aussie would definitely be my focus because I can do spreads at 7:30 at night. And then going on over to Monday, we're going to have construction PMI on the pound dollar at 4:30 a.m. So you got another pound dollar trade. And then going down a little bit further, we're going to have retail sales that night on Aussie dollar again, 7:30, and the cash rate RBA rate statement at 10:30. So a lot of good trades lining up one after the other, just right into the week. And so whether you're an early morning trader, an afternoon trader, an evening trader, these trades are happening around the clock. You're going to have Aussie's GDP on Tuesday. So another trade right there for you. You're going to have Aussie's trade balance report on Wednesday. You're going to go in and, Aussie just lining up. It's pretty nice. A lot of good Aussie trades coming up. And then looking on over at Tuesday. What else do we have Tuesday? Well, we got, let's check it out. We're going to have some European news coming out, so probably going to get some decent Euro moves going on. But pound is probably going to be the big mover because it has a PMI report. That's a big number to focus on. So 4:30 a.m. on Tuesday, you're going to have that services PMI on the pound. And then we'll have the ISM non-manufacturing coming out on Tuesday afternoon. Let me do a little research on that. I'll give you just a quick heads up on what to check out and what pair to focus on for the ISM non-manufacturing PMI. So looking over at that right now, I'm doing just a quick little research, little tool I got here that helps me fly through these pretty fast. And let's see. Well, USD yen's looking pretty good more often than not. And I'm trying to see if there's any of the other ones that maybe give me even more consistency. So Aussie dollar seems to have a pretty good consistent medium impact across the board. And it seems to be doing better than any of the others as far as consistency on a medium impact. So you actually could consider the Aussie dollar. The other one I would consider would be the US yen. The US yen either is like medium, large, occasionally small. So the Aussie dollar is pretty good on a medium impact, but most recently the USD yen's actually been the most impacted pair on the ISM non-manufacturing PMI. So the USD yen would be the one that you'd focus on at 10 o'clock. You could do an 11 o'clock expiration, a 12 o'clock expiration, or a 3 o'clock expiration. You could do a strangle on the binary in any one of those, or you could do a straddle on the spreads on any one of those. So there's 6 possible combinations that you could take advantage of. And right there, just looking at that one. So that gives us the ISM non-manufacturing, and then the other ones are pretty easy. Obviously the Aussie GDP, you're going to be looking at, the Aussie. So you shouldn't have to guess too much on that one. And you can even go back. I can look at all the different currencies, and I'm going to see over and over again that obviously the Aussie dollar is going to be a consistent mover on them. And there's other ones that'll randomly move more, but they're not worth trading because you're going for the consistent, not the big moves, not the occasionally it has a small move. But consistently over and over again, more times than not, obviously a lot more than not, do you have a bigger, at least a medium or higher impact move on a certain report. And when you got that, then you got the right pair. So we can go on over. We're going to have a whole lot of news coming in on Wednesday. We got the ADP non-farm employment change. And we also have Bank of England Governor King speaking, so that may cause some pound dollar movement right there. I'm trying to see if there's anything else. That's about all you may have on pound dollar. I don't know how much of an impact that's going to have. You could probably get a solid half deviation off of it. So I'd probably be looking maybe at a 7 a.m. I don't know. That one's I'm not going to be as big on the Governor King speaking one, honestly. So that's a sort of a second tier trade for me there. Looking on over, we're going to have a USD CAD. That's going to be a great trade right there, 9 a.m. Because you got the Bank of Canada rate statement and overnight rate coming out. So definitely a USD CAD trade on Wednesday. Looking on over, you're going to have the IVPMI coming out an hour after that on the Canadian, and the dollar has a report as well at the same time. So really, you're going to have a 9 o'clock trade. You might get in and take profit. You could literally put another USD CAD trade on right after that. If you're able to get out before the 10 o'clock report comes out, you may be able to have 2 trades in a row on the USD CAD, sort of like you're going to have on Monday night on the Aussie dollar. Now, also, we're going to have the ADP non-farm employment change. So what are we going to look at on that? What are we going to trade? Well, since Bernanke has decided to tie quantitative easing measurements into the unemployment, then one of the most impacted things by dollar's movement would be gold. So gold would definitely be one I'd be looking at trading for the ADP non-farm employment change number when it comes out. As far as currency pairs across the board, let's see here, trying to find really consistent. We got USD yen seems to be doing really good more often than not. And then checking out, let's see, Aussie dollar looks pretty good actually on that report as well. Both of those are sort of almost tied, and they seem to be outpacing. It looks like, oh, well, we do have one big move. Well, yeah, that's not going to work. Okay, never mind. All right, so looking at all the pairs right there, we got a USD yen Aussie dollar report. So you can trade USD yen, Aussie dollar, or gold on the ADP non-farm employment change report, and that is pretty easy. Just trade that trade right there, and you can go in and take advantage of it. That will take care of you for that report. So you got 3 different things you can trade, and gold would probably be my favorite, just because there's a fundamental reason why that news report moves more gold quite a bit now. It's simply because Bernanke's tied, again, quantitative easing directly into the unemployment. So now the weekly unemployment claims that were sort of a smaller impact have now become a bigger impact. And the non-farm and all that stuff obviously always had a good impact, but now it has an even larger impact on the dollar because it signifies what Bernanke will continue or not continue to do as far as QE goes. So using that knowledge to our advantage to be one step ahead of the markets, hence the term diagnostic trading. And what we're doing is, the whole point of diagnostic trading is looking at how other traders look at the market, and again, using that knowledge to be a step ahead of the market. So if we can be a step ahead of the market, then, it doesn't mean that we know what's going to happen. It just means, the market, if this is good, gold's going to go way up. If it's bad, gold's going to go way down. And the reason I know that is because of what Bernanke said. So now that I know fundamentally why traders would do things based on a fundamental news report, I go, well, how can I take advantage of that? Well, I can trade it with a defined risk strategy that goes in both directions, and maybe only risk $10 in either direction, but could make, say, 30 on either side. And if I could do that, then not only can I have a good risk reward, make 20. If I make $20 net profit on either side, when I'm risking a $20 total, then sweet. That's a 1-to-1 risk reward. If I can do that over and over and over again, then, I have a bunch of base hits that line up one after another after another. And so that's why, I'm always focusing on these news reports, because they're easy to trade. If you know the right ones to trade, you know the right times to trade them. Looking on forward, so like I said, we have all those trades right there for Wednesday. We have the Aussie dollar trade balance report. There is some information coming in, interest rates on USD yen. So they're going to have their monetary policy statement, their overnight call rate. They're also going to be, they'll have their regular press conference. And when they do that, all that's tentative. So you can't really time it as in like a 10 minutes before thing. So if you're going to trade the USD yen based on that, which can be a great, obviously, reason to trade it, then what you'd probably want to do is go in pretty close to the open, and around 6 o'clock, and see if you can get a plus or minus deviation for ideally around $25. If you can do that and combine both of those together, so you can get out when it hits them, then great. If you can't, then you may want to avoid it, because that's going to make it a very challenging trade to pull off successfully. All right, we'll stay right there. We'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Alrighty, folks, here we go on to the Diagnostic Trading Hour, and we've been riding gold down all morning long. And go ahead and let me pull this trade in for you right here. Went short right here. We had two things going on that were setting up in our favor. Whoa, let me realign the charts. There we go. And we had an RSI divergence that's set up right here. And so we were able to take advantage of that. We had that RSI going down. We had the price going on up. We had an apex reversal, which is just a perfect, it's basically lower high, higher high, buying on the, selling on the rallies, buying on the dips. And so it's moving on down. And as it moves on down, we're able to tighten our stops. And the way I like to tighten my stops is I use the deviation levels. So right over here on the deviation levels, what you can see is whenever a price closes below a deviation, that's when I like to move my stop to that price. So like right here, this bar closed at it, but not below it. This bar right here actually closed below the deviation level. So with that, I was able to tighten it to basically 1578.8. That put me at a $60 risk on a single contract on the spreads, okay, to a $60, plus reward. So I was at a 1-to-1 risk reward at this point, locked that in. Now it's more about how much can I make. And I'm going for further. I'm trying to see if I can, get more on this chart and see, how much profit can I potentially make on this trade. But with it right now, we're going and we're shooting for, getting that low down here around 1564. And so we'll see if we get there. Like I said, we only got 5 minutes, though. until the market closes down. So at least the floor. And that's when the Nadex trades are going to close down to. They match the floor right there. So, but looking on over at this trade, we literally, I mean, you could not have picked a better time to go short. So that was, I mean, the exact time of the short right there. And so 8:36, I mean, it was just like right on the high. And so you got to love it when that happens. I mean, it doesn't always set up that perfectly, but when it does, you enjoy it. And moving on down now, so we're looking at locking in about, solid 10 to 12 points on the trade and on about a 6-point risk. So if we get 12 points on the trade, that'd be awesome. That'd be a 200% return on our risk. And the great thing is with Apex, you can't get knocked out, okay? And so, again, you can't get knocked out on the Apex with the Nadex spreads. And so with the Nadex spreads right here, my ceiling is $15.90. That means no matter how high gold goes, my risk is $60 a contract. And no matter how high it goes, okay? So again, no matter how high gold goes, it can go to $16.95 or $15.95. It can go to $1,600, $16.10. I can't lose more than 60. Do I want to lose 60? Of course not. Do I want to? And when I say 60, I mean you can multiply that times whatever you're comfortable with. So maybe you're trading 10 contracts, maybe you're trading 50 contracts, maybe you're just trading one contract. So you may be risking 60, 600, 6,000 on the trade. Okay, but of course I don't want to take maximum loss on it, but I'd rather have maximum loss and not have to worry about, I still think it's going to go down, And how many times have you done it? We've all done it. We're all guilty, okay? I still think it's going down, and we put on another one, and it goes against us, and I still think it's going down, and we put on another one, and it goes against us. You don't have to do that, okay? You're short. You're in. It's done. You don't got to worry about it. And, I mean, how weird would you even think about this? Just the stress, okay? It ticks down. And you're sort of excited. You're making a little money. Yeah, you're up, right? You're up 3-4 points. It's $300-$400 on the trade. And then it starts coming back up. You're nervous. You are very nervous, okay? It's like, your heart is beating. Goes back down. Oh, you're excited. Sweet. Okay, now it's making even more money. Then it starts ticking up, and you start stressing a little bit again. You're like, should I close it? Then it starts going down. All right, sweet. Okay. And then it starts coming back up. And now it's like, it's not only is it wiping out all your profits, now you're in a loss. And you're just like, man, I should have just taken it off when it got back down there. I mean, if it gets back down there, I'll take it back off, And it does come down there, and you take it off. Right? And whereas if you just would have been able to not stress out because you weren't worried about every tick knocking you out of the trade, then you could have, it drops, comes back. You're not stressing out. Comes on down. Comes on down. Comes on down. You're able to just ride it on down. And have time. And does that mean it's going to work out? No. But do you need a profit management plan? Yes. Do you need a risk management plan? Yes. Put those together, and that will usually work a lot better for you, and it'll let you live longer because you won't burn out your heart. Okay? So, but pretty simple right there. And I'll put this back up on here for you. But, that's one of the many ways to trade and to trade Nadex. So, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. And looking at several different things right now, checking out the market overall, we'll go ahead and just look at some of the review of the deviation levels, so you can learn more how to use them, how to put them together, and how they can help you whether you're trading futures, forex, etc. And so let me open this up, and what we'll do is we'll just walk on through it step by step. And let's see here. On that one right there, so that ought to be shown in the room here in a second. There we go. All right, so I want to open that up for you so that way you can just sort of see it and how it works, and how the deviations work, because some people understand them, some people don't, and they're new to a lot of people, so I like to just go over them and make sure that you get how they work. The deviations are based on implied volatility. They're based on the expected movement built into option pricing. Okay, so again, that's the expected movement built into the options price itself. And by doing that, we're able to get how far the market expects the market to move. Okay, and if we know how far the market expects the market to move, then we can use that to go at what points do we want to take off and put on positions and take profit, and there's a lot of stuff you can use that for. Where do I want to tighten my stops? I mean, there's a whole lot of things you can use it for. And like today, we used it for our news trading. We went in and we did the Aussie dollar right before 10 o'clock, and we said, okay, so we're basically targeting the 0.5 or the settlement. We're going for those two levels, and that helped us pick our strikes, and we got out when it got there. And you had a couple different opportunities to do quite a few different trades, but those are a couple of the ones we looked at. We also looked over here at pound dollar early this morning, and you could have taken advantage of that. And as you can see, it flew quite far. Have to reload that one up here in a second. There it goes. It's taking a second to feed everything in. And let me reload my data. There we go. One second. There we go. Okay. So got that shown on the chart there. So we had the pound dollar. We had the news. I said at 4:30 we're going to be having news. So get ready. And I mean, it starts pulling down. It's tick, 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 tick. Boom. News comes out. Okay. Flies down. And 0.5, 0.7, 1, 1.5, 2 deviations. Okay. There's a 3% chance it's going to move that far in a given day. And it does it in a matter of, what about 5.5 hours. So flies on down there. And, I mean, one deviation, that's your 70% of expected move right there. Okay? And so you keep going, and you have about 85% of 1.5. And you're going down to, 97% at 2. And then you're at like 99.3% or 99.7% at 3 deviations. So by using this, though, as it hit each level, because, I mean, when something moves that far that fast, it can be, nerve-wracking as to, when to take something off. And, when do I take profit? I don't know when to take profit. I don't want to give all this profit back. I'm making a lot of profit, So there's all the stuff you're going through on this. So the thing's flying down, and let's say you're in the trade, you're short, and now on news trades, I'm usually getting out at a 1-to-1. And now if I'm doing spreads, I will take it further, but I'll use the deviations with it, and I'll be once it hits my price level, I'm definitely going to be a lot more cautious. Okay, but so this thing flies down, and obviously you have a stop there. Now I got to stop here. Now I'm at a 1-to-1, no matter what happens. Okay, well, it keeps going down. It breaks another level. Now I'm looking for the close below. This is big. The close below the deviation. So when it closes below the deviation, tighten my stop right here, tighten my stop again. Okay, this one closes below. I tighten my stop again. I mean, just right here, and we can just make sure we're right on that. We got to close a 15043, 15042, so that one did not close below. And then right here, we're able to go in and tighten our stops. And when I say tighten stop, I mean put it, depending upon your bid-ask spread on the instrument. So let's say you have a 1-tick bid-ask spread, then I'm going to put it like 1 tick above. If I have a 2-tick bid-ask spread, I'm going to put it 2 ticks above. If I have 3 ticks, I'm going to put it 3 ticks above. All right? So, on pound dollar, you can easily have 2 to 3 ticks. So you're looking at 2 to 3 ticks above. So right here, we put it right up there. We got a high of 1048, 1049, 1048. So we didn't actually hit the stop there. So we're in on that one still. And so it's moving down, okay? And as it does that, then, and one of the other things we're able to do is if we get, after a close below, okay, important rule, after a close below the deviation, if we get a close above the deviation, then we can tighten our stop again on the next close below the deviation. So like right here, we tightened it because it closed below, but then we had a close above. So now, even though our stop is still right here, if we can tighten it more, all right, we will when it closes below the deviation level again. So this closed at 15041, which is 1 tick below. So I'm actually able to move my, I'm only moving it down a tick or so. Sometimes it's more, sometimes it's less. Sometimes you had a big bar and it makes a big difference. So going on over here, I'm looking at each one of these. It's going up, down, up, down. I have my stop right here. Has not got hit all day. Okay. And it's moving down. Let's see. How do we do on this one? We got a 15001, 15001 right at it. So it actually hasn't closed yet. So, you may have decided to get out. I don't know. But it has not closed yet. We have not hit the stop yet. And the pound dollar is still moving down. It has about 20 more minutes. When you're right at that deviation, you got like 3 of those, bars trying to spike through it. Nothing's able to close below it. I'd be getting pretty nervous at this point. But following the rules, you'd still be in the trade. You'd still be short. And right now, that'd be an intric right at 15157. And you're down to almost 1500. So you're talking about 150 pip move right there on the news trade. That's just a massive move. And you're still in. And you have a trailing stop. So you're not just holding on, just hoping for the best, okay? You're actually, riding the thing down all the way, and you're using very defined rules to help you manage your profit. One of the things on Nadex is it makes it very easy to manage risk, but you have to manage profit. And that is the reason it manages risk well is because, you can't be stopped out. Your risk is maxed. Your trade is your stop. And you have a stop loss, but you don't have a stop trade. Okay? So I can stay in the trade no matter how much it goes against me. So my risk is managed as long as I don't put on too much. So my only risk is putting on too much. And you don't want to do that. But if you'll manage your risk, then your risk is completely managed because you don't have the psychology and all the other stuff we talked about earlier that you have to deal with. So now you can use the deviation levels to help you maximize, all right? Again, maximize those profits. And it's also really good for when I'm looking for a reversal or something like that. If I think something's going to turn around, I like to look and see, hey, do I see it busting through? If I don't have my normal entry, okay, and I'm looking for just a complete reversal, if I can see that reversal with the, it breaking, if I had a stop here and it broke the stop and I saw a reversal line up, that's just another confirmation for me for taking a reversal. So I don't just take a pure bounce off a deviation because, as you can see, it go 0.5, 0.7, 1, 1.5, 2. So I need to be looking at all of them together and, combining several things. And it's not, not one indicator does a trade system make. And this really isn't an indicator. In the sense of it's a price level. So, you could put it under indicator. I actually call it a statistic. So, indicators are more a combination of historical prices. Statistics are using, some sort of formula to plot just a pure, deviation. It's bell curve. So if it falls truly under bell curve itself, then I'm putting that in the statistic category. And this is statistics. So it's how far should it move based upon the implied volatility. And basically, how far should it not move? It should not move more than 3 deviations. And it's really rare that we see a 3 deviation move. It's not that it doesn't happen. It just doesn't happen, that often. You can see half right there. We're bouncing right here, just looking at the historical. Down a half, up a half. That's a deviation in itself. We got a deviation right there, up, down a half, move right there. So, over and over again, I can see, them working. Every once in a while, we'll see it hit 3. But rarely does it even close below 3 when it does hit it. So, but this just helps me manage my profit and not have that belief it's going to the moon. At the same time, and it manages, you're managing your fear and your greed, right? Because you go in and your greed just wants to take the thing, as far as it will go, and you're just assuming that it's just going to keep going because you want to make as much money as possible. And that's your greed. And so, thing is, then it'll come back against you, and you're still in it. You give up a bunch of profit if you didn't take a loss on top of it. Well, so you need to manage your greed. And your greed says, hey, if it breaks this, get out. Be happy. You just made a lot of money. Okay? You made some money. Be happy. Get out. And your fear, though, says, man, this thing went really far, and I'm up a lot of money. I don't want to give back all the money I'm up now. And I think I'm just going to get out. And that's when you got out at 50 pips, and you could have got out at 150. Okay? Was 50 pips good? Yes. All right? But was there a reason for you to take it off besides simply you're so happy that you made that much money, it's time to go? Because what that usually leads to, okay, what usually happens is fear will take over on your profits and greed will take over on your risk, and then people end up risking too much and they take too little profits. So you want to be able to maximize those profits when you can, and there's nothing wrong with doing that. That's where you're using the spreads. That's why that's one reason I do like the spreads whenever I'm doing a news trade, because the spreads allow me to maximize the profits. The binaries, I'm usually going for base hits, 1 to 1 to 1 to 1 to 1, but I'm doing it a lot. I'm getting a lot of base hits. So those, base hits, I love them. I do them over and over and over again. The spreads, when you get a big move, man, they can just knock it out of the park insane. So, putting all those pieces together can really, make just a solid trading system. And to get access to these deviation levels, if you haven't checked it out already, you can try them out for free. Just hop on over, and you'll be able to log in right there, and then you'll be able to see the deviation levels right here use the current deviation levels, and I plot them every night. They show up at 7:15. So computer generated, does it all, put the formula in, it pops them out. You got them for Nadex. If you're a Nadex trader, we even tell you what spread or what underlying market it's following. Okay, we have the Forex pairs for you Forex traders out there, and we even have the futures for you future traders out there. Okay, so we're laying out front and back month on the futures contracts, so you can go in and you can take advantage of this day after day, and we'll add in more and more instruments as we continue to expand the system out, and but it's just one of those things that you can, like I said, you can definitely take advantage of. Now on gold, let's go back, let's do a quick review of that trade because it's done. Trade's out, it's over, it's expired, settled, and you can see right here on the gold chart where it expired out at 130. We were able to get a close right there at 1672.3, and so not too bad of an entry for an entry right here at around 1584. So you're looking at 1584 to 1572.3. Let's look at what does the risk reward add up to on that trade. And we got a 1584 minus 1573. That's 11 points. We had a 6-point risk. So that's if you're doing the spreads, you made $110. You risk 60. If you're doing the futures, depends upon where you had your stop. Okay, but the futures you'd be up about $1,100 on that trade if you got out right now. So I am flat on the trade, done with it, over. And as far as the call there, and so you need to risk, do whatever you want to do accordingly. Could it continue to drop? Yeah. Could it pull back up? Yeah. But the floor is closed. Okay, it's Friday. There's really no reason to do much more with that trade. All right, so that goes into the pound dollar. We can look at some of the other currency pairs. Let's go ahead and let's check out the euro. So we got the euro dollar over here, and now that one is wrapped up. And let's see here, pull up euro dollar, and close it out. All right, so euro dollar. I mean, look at this. We got a perfect move up on a half deviation, and then look at this. Moves down to another half deviation. Hesitates. 0.7 does a little bounce right there. Gets some nice scalping going on. Moves down to one deviation perfectly right there, and then turns right back around for us. So just some interesting moves over on the euro dollar that we can take advantage of. And love trading currency, obviously. I love trading it even more on the futures market myself. Whether that be Nadex futures contracts. The reason is that the spot, there's just way too many games out there with the over-the-counter spot market. And as far as how they hit stops and everything else. But as far as futures, or as far as future options like on Nadex. Now, Nadex does follow the spot FX, but you're trading on a futures exchange. You're trading on the Nadex exchange. And so you get the benefits of that anonymity that comes with trading on an exchange. So it's really, there's no better way to trade spot FX, in my opinion, than on Nadex. And you can go over, you can look at the euro dollar futures right there. And we can pull it up and see what we get over here. And, we do the exact same thing. Got the deviations here and everything. And moving on down to a -1 deviation. Got to pull right back up. So, it's going to turn out about the same no matter which one you're looking at. And we go over, we can check out a couple other markets. We'll pull up maybe one or two other things right before we wrap up the show for the week. But we'll be right back after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of aggressive shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All righty, folks, checking out a potential solid-looking trade right here, setting up. Got a potential reversal on the Russell, so it looks like it might pull down for us into the end of the day. So that's a trade you could be looking at right now. I'd be definitely putting a stop right at the high of the day. Just a couple ticks above that, so 913. But one of the trades we could look at, we'll go over, we'll pull up the scanner, we'll see if we got any good trades that line up for us right now. So let me pull that up, put it on the screen, see if we can get off maybe one decent, low-risk trade, potentially, 4 days end here. And we'll see. What do we got? We're going to go in, we're going to pull up scanner. And then we're going to go in from here, and we're going to choose the Russell. We're going to choose short. And this shows us all the short trades that currently exist, how far they have to move, what their risk is. So I can go in on this trade right here. Both of this one's going to go to 2, this one's going to go to 3. And let's see, I'm surprised I don't have any that go longer than that. Let me narrow it down from there. Wow, we do have some, but it looks like the risk on them is, well, that one's not as bad. All right, so let's go in and say risk-reward ratio 1, maximum risk 100. All right, that gives us a few more trades showing up on the screen. Okay. So with those settings right there, this trade takes us into 4:15 into the close. I don't like one that expires in 4 minutes. I don't think that's going to do me any good. So So that's one of the reasons I tell people, do not look at simply, your risk. Also look at your break-even distance. So, look at these risk $6. This one has a point to break even. This one has 5 points to break even. Why would you trade this? You'd have no reason to trade this. It's just another one of many good examples of, using the scanner and not knowing, without using the scanner, easily not knowing which trade you should do. So people go in here and they look at, they're just picking just based on risk. They're not looking at, everything they need to look at. And the whole reason I made the scanner was because I didn't have the time. You probably don't have the time. And I didn't really have the desire to sit down and calculate all these things out. When I'm ready to sell, I'm ready to sell. I'm not ready to go in and analyze a whole bunch of different stuff and figure it out. I want to just place my order. So, knowing that, I don't want ones that are, expiring in 3 minutes. Well, that's pretty easy. I can get rid of those. I'll just go up here and say, you know what, don't show me anything that doesn't have at least 5 minutes until expiration. And that right there will, narrow down my choices for me. And then let's go in a little bit further, and we can narrow it down from here and go, okay, well, what do we have? Well, that has 7 points to break even. I know it has $5 risk, but 7 points to break even, probably not a good idea on the Russell. So we'll click on these and see what we got. Okay. This one is risking $10. This one's risking $14. This one has to move 3 points. I don't like that. This one only has to move 1 point. I don't like that I have to move 3 points to be break even on a trade. All right, so with that trade, now what do we got? Well, now we can go down and now I do all this at once. I already have this stuff in here and do it, a little faster than this, but just sort of showing you, the step-by-step process. So I just hop in here instantly and have sell. I already have my settings filled in, and then it would narrow it down for me. But going on in here, looking at this, I basically have two choices. I can choose one that has to move 1.5 points down before it breaks even. It's risking $17. It expires at 3 o'clock. All right. I have another one that only has to move 0.8 down, so about half the distance, but it's risking $40. So, that's really the choice I got to make. Let's say I make this choice right here, then I can click sell on that. And what does that look like? How does this trade actually look like on, how does it play out on a chart? So if I do that and open that ticket up, let's see here, I know I have it somewhere. There it is. Then I can go in and place that trade with a very low risk and, a good risk-reward ratio overall. And let's see here, right there, I got $39 to make up to 151, and I can't be stopped out on the trade. So anyways, check out Nadex if you haven't already. Hop on over and make sure you register for our upcoming live free seminar and get the free trial to the scanner and the deviation to help you out. All right, I hope you all have a great day and a great weekend.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.